I'd like to welcome Frazer Tabeart, Managing Director of Alma Metals, to the stage. He's going to talk to you about the Briggs joint venture in Queensland. Frazer.
Okay, is that better? Okay, so Briggs, a copper joint venture in Queensland, we are earning up to 70%. We're currently just about to reach 30%. We've got two projects, but Briggs is the only one I'm going to talk to you today. It's the most advanced one. We're currently in an active drilling program looking to not only increase the size of the resource, but also to look for some higher grade zones within that. We recently announced a resource upgrade there to just over 400 million tonnes at 0.25% copper and about 32 parts per million molybdenum. So it's one of the largest undeveloped copper projects in Australia, with over 1 million tonnes of contained copper metal in the ground. So it's one of the largest undeveloped projects in this country. There's significant upside in grade and tonnage, and that imminent follow-up drilling is actually underway right now. Just very briefly on the corporate side, there's a fair bit of experience on the board there in developing projects, not only in Australia but also overseas. Relatively tight capital structure and about $5 million in cash and liquid assets. The project sits about 50 kilometres to the west of Gladstone in Queensland. There's a number of things that we like to see in projects like this, but probably the most important one is in that photograph on the right-hand side there. This deposit outcrops. So that 415 million tonnes, which is open in all directions, is from surface, which makes it very amenable to surface soil sampling. We don't have to go to deep-looking geophysics to target further drilling on this project. And you can see the sort of mineralisation we're seeing there, very typical porphyry-style veining, which we see in both the host granodiorite. There's a series of intrusive stocks there that host the copper mineralisation, but that also goes out into the enclosing country rocks. So there's a couple of things that you need to have to make a porphyry project work pretty much anywhere in the world, particularly at the grades that we're at. Low mining costs is important. That comes back to scale and stripping ratio, so we'll talk a little bit about that. You need good infrastructure. This photograph here is the Port of Gladstone, which has multiple coal terminals, multiple LNG terminals, a number of alumina smelters and an alumina refinery. So we're not short on infrastructure, and we've got plenty of roads and rail access between the project and this type of infrastructure. You need good metallurgy so that you're not leaving too much metal on the tailings dam, and obviously a robust copper price is pretty useful as well. So I'll go through a little bit on all of those and how it relates to this project. I'll start with copper. This is something that's out of our control in terms of the pricing. And I put a few quotes up there that some people will be familiar with from people that understand the copper market far better than I do. Bottom line is copper is obviously a critical metal for global decarbonisation. We can't do without it. If we want to get to net zero in any of our lifetimes, you've got to increase the amount of copper that's being produced. And that's a big challenge, as these gentlemen are saying. And it's driven by both increased demand, but some choke points in supply that we can see coming in 2 or 3 years' time, where there's what's being referred to as a copper cliff. And those combinations are going to drive, in our view, copper prices through the roof sometime in the next 12 to 24 months. And projects like this will be then very well positioned to take advantage of that. Scale, you need scale. So we think we've got scale emerging here at Briggs. As I said, the existing resource is 415 million tonnes. We've got an exploration target on top of that, which is between 450 and 850 million tonnes. So there's every potential with further drilling that we could get well over 1 billion tonnes here. That's just in the top 500 to 600 metres. We've drilled it down to 400 metres. We haven't found the bottom of it yet. So every likelihood this is a multi-billion tonne resource in the fullness of time. One of the key challenges for us is low grade. A lot of people look at 0.25% copper and think, well, that's never going to work. Well, it's working in some of these places. And there's a few key things you need to make low-grade copper work. It all really comes down to scale. If you look at all these projects here, they're all producing somewhere between 60,000 tonnes and 500,000 tonnes of copper metal per year. And Briggs has the scale to be able to do that. They've also got generally relatively low stripping ratios. So again, if you've got a big deposit at surface and you get those low stripping ratios, you've got a chance of making it work. And most of them are in what you might call tier 1 jurisdictions, where the fiscal regime is well set, well known, and unlikely to change during the investment cycle. So that's an important consideration. But there are certainly a number of projects out there that are working in that 0.25 to 0.35% copper space. Metallurgy. So this is the metallurgy from Briggs itself. This is very preliminary data, but the results so far have been extremely encouraging. We've just looked at 3 main composites, one of the host granodiorite, one of the enclosing mineralised sediments, and then one of some particularly copper-rich zones, which are very quartz-rich rocks with some unusual textures. All 3 respond particularly well to conventional flotation, and we're seeing, between 92 and 95% recovery at close to commercial concentrate grades there. As I said, this is with no optimisation at all. So we're very confident that with further work, we'll be able to get this up to a plus 22% copper con grade, potentially at somewhere in the high 80s to low 90s recovery, subject to further work. We've also got, for the first time, moly in the resource. There's been no test work yet done on molybdenum, so that'll be part of the next phase of MET testing. Infrastructure, I've kind of covered that a little bit, but just to see where the project sits, we're just to the north of a road, a rail corridor. There's 275,000 volt power lines, both to the north and the south of the project, and 3 gas pipelines. So we're not going to have any problems with getting energy into the project. We're not going to have any problems with getting our product out from the project. Let's talk about the project itself. So as I mentioned before, the deposit outcrops. So soil sampling is very, very effective. So the image there, the colours represent copper anomalism in soil sampling. You can see the scale of the anomaly. It's a composite anomaly with over 2.3 kilometres of strike length and about 1.2 kilometres of cross strike. We've got a northern zone, a central zone, and a southern zone with a number of satellite anomalies. The current resource is only constrained by the drilling that's been done to date. There's not much drilling outside of the resource, and any of that drilling outside of the resource has not been effective. Most of it's only 20 to 30 metre deep holes that do have some copper anomalism in them, but haven't yet made it into the resource. So we've been doing some work this year. We've started to do some drilling in this gap, and we're doing some drilling in this area here to look for some higher grade zones to increase on this resource. So the resource numbers are there, various cut-off grades, so you can see what the grade tonnage envelope looks like. As I said, that's in the top sort of 600 metres, and that's just constrained by where we've drilled. You can see the significant upside here in the northern porphyry, virtually no drilling into the southern porphyry, and some subordinate anomalies here. And then, not atypical for porphyry coppers, there's a slight discordance between the copper and the molybdenum anomalism. So there's a very large moly anomaly out in here, and the reason this drill hole was extended so deep is we were seeing a lot of visible molybdenum in there. That entire hole averaged over 100 ppm molybdenum. So there's certainly more drilling that's going to be required in here to look for some higher grade molybdenum as part of the emerging story on the project. There are some higher grade zones as well. So, whilst the overall resource is about 0.25% copper, on a number of the sections within the central porphyry in particular, we are seeing grades of up to 0.4 to 0.5% copper over many tens of metres. It tends to be associated with the contact between the host granodiorites and the enclosing volcanic sediments, but there are some higher grade near surface zones as well that are just being controlled by changes in the vein density in the intrusions. So we're following up on some of that at the moment to see if we can define a 3 to 4 year starter pit that might be in the 0.4 to 0.5% copper grade range. So that work commenced about a month ago. We did 2 holes looking at the potential extensions on the southern side of the northern porphyry, but recent drilling's moved now to focus on some of these higher grade zones that we see particularly in the central zone. And this is the type of stuff we're looking for. Classic here, created porphyry texture with porphyry style veins, mainly chalcopyrite, a little bit of pyrite. This particular sample, around about 0.7% copper within a 0.3% copper zone. This sample here probably averaging or assaying about 1% copper within a zone that averaged about 0.45% copper over a metre. And then just in terms of the upside, we have put out a revised exploration target as well. So the dashed outline there is sort of a combination of the soil sampling and the geology, where we think within that we'll have success between a cut-off grade of 0.1 to 0.2% copper. And you can see the numbers there. We believe there's another sort of 500 to almost 900 million tonnes of mineralisation at the same grade within that dashed white outline down to a depth of 500 metres below sea level, which is about 600 metres below the surface here. And that will be the focus of drilling over the next 1 to 2 field seasons. So that's pretty much us, a very large resource, great potential to grow it, both in terms of size and grade. That work's underway now, good news flow, great infrastructure and great metallurgy. So, we believe we're onto something that here is going to be mined at some point, just a question of when that happens. So thank you for your time and happy to take any questions.
Questions? No, I did have one question, Frazer. Exactly, obviously looking for porphyries, there's a lot of work to do. Could you give us an idea of the program, how intense it is? And you may have had it up there and I may have missed it, but what's the cash position like in terms of funding that program?
Yeah, so the current program is drilling around about 2,000 metres of drilling. So we're looking at sort of around about 10 holes at the moment. They're going to be relatively short into that central zone because we're trying to evaluate what might be a starter pit position. So that's fully funded. We raised $2 million for that about 4 months ago. So that program's fully funded. We do have liquid assets. We own about 15 million shares in Caravel Minerals, which is one of our sister companies. Also a very large copper deposit, in that case in Western Australia. So that is something that we could at some point trade sale that and raise further funds through that. But we do have a very supportive shareholder group that have continued to fund this project over the last couple of years.
Okay, and what's the work that needs to be done to get to 70%?
So the work program is a staged entry. So we're just about to go to the 30%. That was through expenditure of $3 million since inception. We spend another $3 million, and we've got a 3-year deadline before we have to do that. That gets us to 51%, and then another $9 million to go to 70%, and we've got until 2032 to do that. So plenty of time to get to that 70% position.
Thanks, Frazer. Cheers.
Thank you.